Are you ready to make decisions about your investment? Tesla, the famous electric car company, has been a hot topic in the stock market lately, with its ups and downs leaving many people wondering if now is the right time to buy. Investing is all about timing, and now may be the right time to make your move with the legendary EV manufacturer. A smart investment today could pay off big in the future, and who knows, you might even be able to retire early. Join us as we look at the current state of Tesla stock and hear from experts in the field about when they think it might be a good idea to invest. Grab your seatbelts and get ready for the ride of your life. But first, hit the like button and subscribe. If you had to buy Tesla stock right now, when would you do it? Industry analysts say that Tesla stock has underperformed, but investors have been buying up shares for months. Even though Tesla stock went down in January and throughout 2022, it has gone up a lot in February. Star investor Cathie Wood has been buying up Desert shares. It looks like she is on a dip buying spree because her investment firm, ARK Invest, has been buying Tesla shares whenever the stock hits a record low. Many analysts agree with Cathie Wood that the current drop in the stock price is a great time for investors to buy, even though Tesla is trading at levels that may not always correspond with the company's fundamentals. In a recent interview, Mark Newton, head of technical strategy at Strat Global, said that buying opportunities would continue to come up. Newton still believes that Tesla is a solid business, but he does acknowledge that some investors have lost faith in the stock due to market volatility and other factors. At the end of the first week of January, Tesla stock was trading at about $113 per share, but it has gone up almost double in February. The next day, it dropped even more, opening with a sharp 5.7% decline. As Newton said in an early January CNBC appearance, when Tesla stock gets down near $100 for me by the end of the month, some things will line up that suggest that the stock is trading a buy, and it could have a very sharp bounce. Mark Newton, a market technician and managing director of the fund Strat, told Yahoo Finance Law a few days after the CNBC interview that he thought it was official that Tesla was oversold. He said, "I'm expecting a bottom under 100. Before Tesla reports earnings at the end of the month, several of my models show that the stock might hit bottom. After that, the price might rise throughout the spring." Shares of the electric vehicle manufacturer have dropped 65% in the last year, but they are up 10 to 20% so far in 2023. According to Newton, analysts think that a number of factors have led to this shocking drop, including the risk of operational miscusa. Tesla has grown as the company has grown and is now the newest company in a stable. Even with these fears, Elon Musk is focused on it. And some people are starting to like Tesla stock in the same way that fund struts Newton. We also think that the Q4 setup is better than last year. Secondly, concerns remained around manufacturing issues and the pace of sales for Tesla in China amid an uncertain approach to COVID-19 policies. And finally, competition in the EV space in the United States has only intensified this year, raising Tesla's risk of slowing growth in 2023 and beyond an A. Recent client note Citi analyst McKaylee said that the latest sell-off has been fueled by actual unfavorable factors. We don't expect Q4 numbers to be enough to alleviate concerns about China's competition for market share or other factors that weighed on confidence in December, so the timing and release of new or updated models in conjunction with the quarterly report in the Investor Day on March 1st might provide much-needed visibility and handhold on these questions, and could in and of itself provide at least a brief boost to consumer confidence outside of Tesla are also beginning to change their tune. We think that Tesla's new products will help the company capitalize on this growing market, which is why Edward Jones changed its rating on Tesla stock from hold to buy in the first week of January. We also think that the current share price of Tesla does not accurately reflect the company's long-term growth prospects, as market analyst Jeff Woodun described them to two investors. The price of Tesla stock has dropped a lot in the past year because of worries about slowing economic growth and Elon Musk's time spent managing Twitter. This may have an effect on short-term auto sales, but we think the electric vehicle market will continue to grow because of global regulations. Even though competition is growing, we think Tesla will maintain a large position in global markets as long as the company's management team can carry out its current operational plans. Analysts believe that Musk's departure from Twitter would be beneficial. Moreover, Tesla is working to improve manufacturing efficiency and reduce costs in ongoing design improvements with batteries are expected to reduce costs and help to improve profitability, so the company's focus on software or subscription-based programs like full self-driving is particularly important. When Dow expressed optimism that Tesla would be able to capitalize on this growing market with this upcoming product introductions, the analyst said, "We believe that Tesla stock price does not adequately reflect the company's long-term growth process in the market, due in part the changes in investor sentiment on Tesla's future, which is contingent on development in the electric vehicle market. The company's stock price experiences greater volatility than the market average." In a note to clients, Wendu called Tesla stock as seeming cheap. Considering the potential for the company's long-term development, he also added that he expected Tesla's full self-driving FSD to launch later this year. Wendy admits that the stock market has moved a lot this year, but he thinks that Tesla's beta will continue to get better along with the company's EV batteries. New products coming out this year include the Cybertruck and a possible updated Model 3 design later in the year. Keeping an accessible part of the electric vehicle business going is important for Tesla's future, happiness like the success of any other business plan, and may go after it. Tesla's price goes up and down more than usual in both ways because investor sentiment changes more than usual. Mark Newton, an expert on the foreign stock market and owner of Tesla stock, says investors shouldn't count on our recovery. According to a recent talk with CNBC, soon. For short-term investors, Newton said, "We have to rise almost above the area where it was broken to think that we are going to start a big rally." The stock started to fall in November and hit a low point of about $206 per share. Despite Newton's warnings, the stock is now back to about those same levels and is looking quite solid. This is despite Tesla's terrible fourth quarter, during which the stock dropped 60 in less than 4 months and he raised $700 billion in market cap. Newton warned investors that they can't do business that way. The electric vehicle manufacturer missed its earnings goal and production and delivery targets in the third quarter. However, Tesla CEO Elon Musk sold most of his shares to pay for the company's $44 billion purchase of Twitter. Musk's tutor was able to cover most of the client's costs. Venture had greatly upset Tesla investors, with some calling for Musk to leave the social media company because he is facing growing criticism for his leadership style and political tweets and memes since going public in 2010. The current sell-off is the worst for the company, but analysts say that Musk's promise to step down as CEO of Twitter once a replacement has been found could be good for Tesla stock, though Newton says a big rebound is not likely in the near future. Bearish calls were made public 2 months ago, which made the stock's fundamentals weak. If 2022 taught us anything, it's that buying on the cheap when something is down 50 isn't always a good idea in a bear market, which is Wall Street's biggest mistake. Newton also said that there could be a very sharp rise, but that it was too early to think about that. At the end of the month, when Tesla reports his fourth quarter profits, there will be a possible buying opportunity for investors, even though there is still a short-term downside. He went on to say that a 10% drop in a stock price through January could leave room for a 30 to 50% recovery, and we're just seeing the start of that in February. If you like this video, please hit the like button and subscribe.